Cheers, how you doing, and welcome back to the channel. In today's video, we're going to do a trade review. This time a winning trade review, a very nice trade indeed on New Zealand yen, capping off a very nice January. It's a really nice setup and we got our rewards because of it. And there's a few good things we did that I wanted to show you. So just for transparency purposes, you know I'm not bullshitting you. This is the trade that I posted in our Discord. Remember, if you're interested in that, link down below, 7 days free, 50k FTMO giveaway every month. $200 giveaway every month. Okay, plug done. Let's get on with it. So you can see here on the screen, the 1st of the 20th, 2022. I say that as the 20th of the 1st or the 20th of January. An NZDJPY short at current price, stop loss 21 pips. TP1 at 1-to-1 risk reward and 50% runner. That's what I do with every one of my trades. Take two trades, two separate trades. One at 1-to-1 risk reward, i.e. 21 pips, same as a stop loss. And then I leave 50% running to trail the swings. And I always put a little bit of information on why I'm taking it, but I'll do that on the main chart so it's easier for you to see. So on this trading time frame, which is the 30-minute chart, which for me is actually my favorite chart for some reason. Don't know why, I just really like it. I didn't used to like the 15, moved between the 30 and the 1 hour, and I kind of really like that chart. So if you haven't used it before, have a little test, maybe you'll like it as well. But this is our setup. We have our context here, i.e. our cut with handle, one of my favorite contexts. I'll go into that in a second. A breakout and a retest. So essentially it is a breakout retest trade. Within our setup, we've got our basing structure here. We then go into our nice corrective, digesting this basing structure 30 to 50%. I always have that 30-50% rule of digestion for our secondary structure within the context. So what I mean by that is this is our secondary structure within our context. So if I'm looking at a breakout with a cut with handle, right, I don't want to see this because this digestive structure is too small to digest this basing structure, okay, and certainly too small to digest this initial impulse up to our key area. So what I need to see is something like this, 30 to 50% of this basing structure breakout retest to go to the upside. Within this corrective, we have our, and my favorite pullback, ABC. So you have our ABC. The reason why I like the ABC is usually at this area, we see a lot of retail stops. A lot of retail stops being taken out, thinking this is going to go long, thinking that's this potentially changing trend because of a break of structure, and then it comes back down. We also had a risk-off environment in the SPX, so I like the idea of selling the New Zealand yen at this point in time. Now, another good thing about the setup is we don't want to see price being too climactic breaking this level, because that can often be susceptible to a fake out, which we see over 70% of the time. 70% of breaks are fake outs. So what's good about this price action is we've got little correctives here. Push on, tag that area again, push through back to this 20 period SMA. Okay, notice these wicks as well on this 20, rejection to the upside before we break through, and we broke through on increasing volume. Excellent. Then our retest, I've got two types of retest I like. The first is the steady state and the second is the ABC. So here we've got our A, here we've got our B, and here we have our C. So within this context, I need a catalyst to get me in, i.e. my RTE, my reason to enter. If you don't know what that is, have a watch of the vlog I posted just yesterday. And this is my reason to enter here. So we had an inverted hammer coming again on increasing volume. That's exactly what I wanted to see. So this is my catalyst. I always put my stop at my previous swing, which on this instance was a very good idea, because notice when I do my back testing, I won more trades by putting my stop at the previous swing rather than just selling the candle. This for me was too tight. I would rather win more trades, but fair enough, make a little bit less money on those winning trades because my risk reward is obviously a little bit higher. However, in this instance, again, like I said, this was a great decision because we did push up. I didn't actually buy this push. I was looking at the market around this area thinking, I don't really buy this push in this New Zealand yen because risk sentiment ain't good. Market ain't confident. Stocks are pushing down or stocks are falling down. And then we did finally get our movement at this area. So if we notice what happened after this, we come all the way down. Say this was overnight. It started moving over Asia. I woke up to something around here thinking brilliant. TP1 was obviously hit. So TP1 was roughly at this area. So after TP1 was hit, obviously we are just trailing our stops to get the latest swing, moving our stop down here until we were eventually stopped out at roughly this area here. We moved our stop, got stopped out on this slight wick, and then it moved to the upside, coming back down. But a 3.25 hour trade. So a great setup and certainly a great result. Now, again, another thing I did like about this trade is if we look at the SPX, we took this trade when the markets were falling. I guess it was 20th of January, right? So 20th of January is here. Okay, the market is obviously broken structure through this area. So we're plummeting and we're plummeting fast, and that obviously favors the risk off currencies, and that is the JPY and the Swiss franc. So buying that against the commodities, i.e. the Aussie, New Zealand, and CAD, makes sense to me. So I like that setup from that perspective as well. Now, I always do need that higher time frame confluence. So if you look at NZDJPY back again on this 4 hour and on this daily chart on the 20th of January, which is here, we can see that it looked to be breaking through this area and a simple breakout retest on this 4 hour. And then we got that big movement to the downside. So again, going with that downtrend market, looking like, for me, a decent cup with handle, not enough for a breakout retest on the 4 hour, but a good pattern nonetheless. We've got an outside bullish engulfer here. We've got a break of these moving averages, or a break underneath, and a breaking close underneath these moving averages. We've got a nice pullback. We've got a 4 hour inverted hammer, albeit it's very small. And then we move to the downside. Again, we look at the daily chart. And again, underneath all these moving averages, we were here when we placed the trade. It looked like we were breaking through there. Momentum is to the downside. We could be in this impulse, larger corrective, and now pushing through. So all these things added up to it being a very nice trade. So NZDJPY, good example of the context I like, the retest I like, very good on the trading time frame. Good context with our market sentiment, i.e. our risk sentiment, risk off, favoring buying that yen, favoring selling the Kiwi. And also we have our 4 hour and daily confluence that for me looks like Kiwi yen wants to move to the downside. So great trade. Right, guys, if you like the video, make sure you hit that like button. Again, if you're interested in learning how I trade, link is down below. Check it. We're pretty good. 7 days free. Trade safe. Peace.